Good afternoon. This is Dave Knight here at Knight Capital Management. Thanks for watching. Thanks again for being here. Last week we talked about what makes you tick as a trader and what makes you get up in the morning, what makes you want to continue to do this business. And what I want to do this afternoon is take some time to talk just one-on-one, just you and I talking to each other like you were sitting right across the table from me, or we're eating lunch or breakfast, or just you and I sitting back and talking and discussing the psychological effects of trading. Because in my humble opinion, they say 90%. I forget about what they say. I'm going to tell you that 100% of your trading success is going to rely on your psychological makeup as a trader, and especially as a day trader. This is a game of confidence. I can give you a system that's going to win 60% of the time. I can give you a system that's going to win 50% of the time. And you will make money if you follow the trading rules that are established. But if you break away from the trading rules, if you do things that are not in the scope, take on unnecessary risk, over trading, not willing to take that next trade on that ends up being a winner, and then you get crazy and trade even more recklessly, losing even more money. The psychological effects of trading can be detrimental. You know, I've talked to many different traders in my career here. 25 plus years I've been doing this, and it's not an easy business to be a part of from my side of the table, because unfortunately I run into so many different people that are struggling, and it's honest to God, it's a crying shame, and I wish I could help everybody, but unfortunately I'm just one person trying to make a difference out here to as many people as I can affect, as many people as I can teach them how to fish for a living in this case. Trading is a blessing to me. It's a blessing to get up in the morning and know that I am responsible for my own results and for the own income that I'm going to make within a given year. I am responsible for that. Likewise, you have to take full responsibility for your trading and also your trading losses, especially your trading losses, because this is a business that you will lose. You will have streaks of losing trades. Do not mistake that you're going to come in here and everything's going to be roses and, wow, I'm going to make so much money, and you start counting all that money before it's hatched, or kind of like the song with was the song way back, you gotta know when to hold them and know when to fold them, right? Kenny Rogers, the gambler. This is a business. You shouldn't treat it as a hobby. You should not treat this business as a gambling situation. Day trading is serious business. You have the edge as a day trader, especially if you follow the trading methods and strategies that we put out on our website. Even our free trading strategy called the E-mini Bull Bear if you take, the key to that strategy is to take more out of the market than you lose. The key to any strategy is to win more than you lose. It's been statistically proven that you can have a 30% winning rate percentage strategy and still win, because your profit factor on your particular win trades are much greater than the losers, the trades that you're taking for losses. Now, we teach in our room a concept that, frankly, I fortunately read some books, and I've struggled and I've been doing this for years, but when I sat down about 10 years ago and really decided that I'm going to make a real go at this, I started defining what risk meant to me. And a really good book that I highly recommend at this point in time before we get our book out there is a book from Van Tharp called Trade Your Way to Financial Freedom, or his other book called Super Trader. He talks about a concept called R, or R standing for risk. You need to define, each one of you, what R means to you. Now, in our room, we've defined R as a percentage of our ADR, and now ADR for us means the average daily range. So we take a calculation on a daily basis, and we use that calculation. And for instance, in our TCB crude oil product, where we're trading the crude oil market, we take a percentage of that on our ADR. We define that as R. That becomes our hard stop on every trade. We don't, obviously, slippage can come in, but for the most part, we don't want to exceed that hard stop. Now, we can fluctuate we can move our contract or stop loss up and back. For instance, let's say it's 20 ticks, and the market says, okay, move to 10 ticks, but then it comes within a tick of stopping you out, and you move back a couple ticks. But the trick is not to go past your hard stop. Never take a greater loss, in this case, where you define I would say what you define 1R to be. The psychological makeup of a trader is that you got to, right? As the donkey says in Shrek. You've got to limit your loss. You've got to let those profits run. Cut your losses short. I mean, everybody knows that. Everybody that's a trader knows the top 10 rules. I don't have to preach to you the top 10 rules of trading. But if you are risking more than you're winning on any trade, I can tell you, just as sure as you and I are sitting here today, you will bankrupt your account. You'll decimate it. You will not win overall. You can have a 90% winning factor and still lose your whole trading account if you don't take into account having lower losses than your wins overall. Now, some trades are going to be break even. Obviously, you're going to have your break even trades. You're going to have some trades that you're just lucky to get out of the market, right? Because an event happens and you're on the wrong side of that trade. Outside of that, what you want to do, and you're looking at a 40 trades to 100 trades type of time frame, and you're looking at your profit factor. Your win-loss rate obviously is important, but more important than your winning factor is your winning percentage is what is your profit factor. How are you stacking up? Are you over that one figure? Now, a profit factor over 1 means you're basically winning more, you're breaking even at that point. And your profit factor needs to include your commission costs. If you're not including the cost it takes to put on the trade, and after you do that, you have a losing balance. Because in the end, we're all judged by what we have in our trading account, right? So, all right, well, I've talked to 8 minutes here. I really wanted to have a heart-to-heart with you this afternoon and talk to you what's been on my heart and weighing heavy on my heart, because I obviously want to help as many people as I can. Now, we are in the process of signing up our TCB early bird list for May of 2011. We'd love to have you in our next trading class that's coming up here in May. Once again, we're only going to take between 10 and 12 traders in this next class. I love keeping the classroom small because it gives me more one-on-one time with you. If you want to learn how to trade, if you finally want to turn the corner and be a winner instead of a loser as a trader, if you're already a winner and you want to learn a strategy that you can effectively trade the crude oil market, we encourage you to take advantage of the volatility of crude oil right now and be able to make money quickly. And in this business, obviously it's a double-edged sword. You got to be willing to take the loss side of a trade, but when you're winning more than you're losing overall, it's a good feeling knowing and going to bed as a day trader, no, I don't have any positions on overnight. And especially in the volatility of the market today, right? I mean, with all of the events going on, Japan blowing up, Libya, the Middle East, you name it, what's next? What's next? A nuclear attack, a terrorist attack? Who knows where this world? Is it really going to end in December of 2012? I don't know. No one knows those answers. But what I do know, as a day trader, I can control my risk. I can go to bed and sleep easy at night. I encourage you to do the same. I encourage you to take a look at our company, here at Knight Capital Management. If there's anything that we can do to help and assist you in your personal trading and goals, we look forward to working with you. Once again, this is Dave Knight here at Knight Capital Management. Sign up for our early bird list on our TCB crude oil product. We're looking forward to getting started with you in May of 2011. We're coming up to it. It's less than 2 months away right now. We're closing in on roughly less than 45 days at this point when we start up our new class. We'll see you soon. If there's any questions, anything I can do to help, just get in contact with me. Go to our Contact Us page on Knight Capital Management or send me an email. My phone number's there. Leave me a message. We'll set time for you and I to talk. So if you'd like to continue this conversation more one-on-one, I encourage you to get in contact with me. Sign up for our list. Learn more about it. We'll see you on our next video when we start tackling another question on the top 10 should-ask questions that you should be asking yourself as a trader. We'll look forward to seeing you on our next video next week. Until then, we'll see you next week. Bye now.